What is going on, my friends? Ryan Williams here, back with another one, and I am so excited to get into today's video with you guys because we have a lot of fun stuff going on in this one. To kick things off, we are going to be talking about a dividend stock that I've been looking into recently that appears to be pretty dang affordable and also is growing its dividend at a rate faster than me in a Ferrari on the way to pick up some In-N-Out burger. And then after that, later on in this video, I will be giving you guys my weekly portfolio update, which is going to be especially awesome because I just added 2 new dividend stocks to my portfolio, which brought my annual dividend income to a whole another level, and I am pumped to share those details with you guys, so be sure to stick around for that. Anyway, before we get rocking and rolling, if the best part of your day is waking up to see new dividend payments coming in, go ahead and give this video a big thumbs up. Also, for those of you who are new to my channel, first of all, welcome aboard, and thank you so much for taking the time to watch this video. All of the videos I upload here are on the subject of dividend stocks, most of which are dividend analyses and updates, as well as inside looks into my dividend stock portfolio, just to see how it continues to grow over time. So if that's at all up your alley, I'd ask you to consider subscribing to my channel. I'd love to have you all along for the ride and have you be a part of my dividend investing journey. Anyway, thank you so much for doing that. And now, without further ado, let's get into it. All right, my friends, now getting right into it. The company we are going to be talking about today is the Allstate Corporation, ticker symbol ALL. And as I mentioned in the intro to this video, this is a company that I've been looking into more recently, probably within the last week or 2 weeks. And I also added it to my watch list because I am actually considering adding it to my portfolio. And so what we are going to do, guys, we are going to run through this stock here on Seeking Alpha and take a look at some of the metrics behind it just to see what this stock is working with. And as we're going through it, I would be very curious to hear your guys' feedback about this stock in the comments below. So leave me a comment below as we're going through it. Let me know what you guys think of ticker symbol ALL. I'd be curious to hear. Anyway, guys, let's get this thing going, and let's start by talking about some of the price history behind this company. So as you can see here, in the last year, they are up 21.5%, which is really not too bad. Pretty good return. And then in the last 6 months, actually, they are down quite a bit, guys, down over 14.5% in the last 6 months, which is a pretty big drop. And if we zoom in even more recently, we can see that a lot of that negativity has come in the last month where they are down 10.4%. That is a huge drop in a very short amount of time. And after seeing this, guys, I was very curious to try and find out why this company is down so much. What is causing this company to just plummet in share price? And to get the answer to this, guys, let's go over to this screen right here where we can read a little bit from this Seeking Alpha article that says Allstate shares slide 3% after Q3 underwriting loss from supply chain issues. And this came out at the beginning of November. So this will give us some insight as to why the company has declined so much in share price, especially in the last 30 days, right? Because we saw they dropped over 10%. So this first bullet point reads, Allstate posts Q3 underwriting of a $534 million loss versus a gain of $752 million in the same period a year ago due to inflation in auto repair costs, says Chairman, President, and CEO Tom Wilson. And then moving on to this second bullet point, auto insurance had an underwriting loss in the quarter as supply chain disruptions drove rapid price increases for used cars and original equipment parts. So essentially what these 2 bullet points are saying right here, guys, is when Allstate's insureds report a claim for like an auto accident or for some reason or another they need to get their cars repaired, it is costing this insurance company more to repair those cars due to supply chain disruptions and also just inflation in general and the price of used cars being more expensive, as well as the equipment or the parts for these cars. But honestly, guys, that's really the only negative thing I can see that Allstate has going on right now. If we scroll down a little bit more, we can see that they are taking in more premiums for home insurance. We can see that they are taking in more premiums for health insurance. And we can also see their net investment income is bringing in more revenue for the company as well. So they do have some, I would say, more positive things going on than negative. And because of that, I don't necessarily mind that the price is coming down so much, to be honest with you. So let's go back to this screen right here and talk a little bit about the valuation of this company. Because with the share price continuing to go down, guys, obviously it is just making this company look more affordable to buy. So if we click over to the valuation page, we can see that Seeking Alpha gives it an overall valuation score of an A-, which is pretty dang good. I got a few of those in my day when I was going to school. And if we take a look at a few metrics, we can see why they're getting such a good score. So the forward PE ratio of Allstate is 8.37, which in its own right is pretty solid, but that's also 22, almost 23% lower than this company's 5-year average PE ratio of 10.85. Scrolling down a little bit, looking at the price to book, we can see that that is 1.32, which also in its own right is looking pretty good. A perfect price to book ratio is 1.0, and this is not too far off from that, guys. This also happens to be almost 9% lower than Allstate's 5-year average price to book of 1.45. And last but not least, their price to cash flow is looking great, 5.91, which, yes, also happens to be lower than the 5-year average price to cash flow of 6.76 by 12.5%. So all across the board, these three metrics are showing that Allstate is looking more affordably valued than it has in the last 5 years on average. Just based on these three metrics, it's looking like a really good time to buy Allstate. Now, with that said, guys, let's scroll up and just take a look at some of the financials behind this company, see how they are growing in revenue and all that jazz. So let's start off on the income statement here, guys, looking at total revenues. Across the last 5 years or so, we can see it has gone up pretty steadily from $37.4 billion to, in December 2020, $44.8 billion basically, and then in the trailing 12 months, they're doing over $51 billion in total revenues, which is pretty good. Now let's jump over to the balance sheet and scroll down and take a look at the shares outstanding. If we scroll down, I think we are gonna like what we see here. That's right. So this company is buying back shares at a crazy rate, guys. So December 2016, 366 million shares outstanding. Zoom forward to the last report, the Q3 report, they have 288 million shares outstanding. So that's come down quite a bit in the last handful of years. And last but not least, guys, let's scroll up and go over to the statement of cash flows real quick. I want to take a look at the free cash flow and see how that is doing. So, okay, levered free cash flow down here, we can see it's kind of all over the place, right? So December 2017, $7.5 billion of free cash flow. 2018, that dropped pretty substantially. Okay, 2019, that went back up, basically doubled from the prior year. 2020, it's down again. And then in the trailing 12 months, it is up quite a bit again. So the levered free cash flow is all over the place, like I said. But if we look a few rows down to the free cash flow per share, we can see that that is increasing pretty consistently with each year, which makes sense, guys. There's less shares outstanding, so that free cash flow can be divvied up amongst less shares. That's a big reason why we're seeing this number go up, which is fine by me, guys. The more free cash flow per share means the more likely they are to continue paying and growing the dividend, which brings us to our next point. Let's scroll up and go over to the dividend page and take a look at some of the dividend stats. All right, guys, so first things first, let's take a look at all of these. Seeking Alpha is giving pretty much all of the categories for the dividend a really good grade here. So A for dividend safety, A- for dividend growth, B for dividend yield, which we'll take a look at that in a second, and then dividend consistency is an A. But going back to this B for dividend yield, the reason that is because this company has a forward dividend yield of 2.83%, which admittedly is a very average dividend yield, but there's nothing wrong with that. 2.83%, I'll take that, guys. This company's dividend has a lot of other good things going for it. Like, for example, the payout ratio is 23.65%, which is very manageable. That's a very low payout ratio, which is one metric that points to the safety of this dividend and probably one of the reasons they give it an A. This company has a lot of room to contribute more to the dividend. And also moving on to the 5-year growth rate, 18.15%. That's a really high 5-year growth rate, guys. I really like to see that. And me personally, I feel like I need a few more high growing dividend companies in my portfolio. I have a handful of high yielders. I have like EPD and Altria Group and stuff like that, but I need some more that are going to increase their dividends at a faster rate. And this is a great example. 18.15%, like I said, is very amazing. And they have a pretty solid dividend growth history too of 11 consecutive years. And I think they call those, I just learned this the other day. I think they call those dividend achievers. Do I have that right? Which I think is a company that has been growing its dividend for over 10 years. And this hits that criteria, 11 years of consecutive dividend growth. I like to see that. Now let's go over to the dividend history, guys. So 11 years of consecutive growth, but they have been paying their dividend for 27 consecutive years, which is also really good to see. They haven't cut it in a long time. They reduced their dividend between 2008 and 2009, and I'm sure you guys can guess why that is, okay? That was a tough time for a lot of companies. I'm sure they were not the only one. But since then, guys, they've done a really good job of growing their dividend, especially like recently. Look at this. So just recently between November and March, okay, they increased their dividend by, what is that, 27 cents? Is that like that's a 50% gain right there, right? So between November and March, they increased their dividend by 50%, which is insane. I don't know if I've ever seen that. But at any rate, guys, it is good to see this company is getting their dividend growth back on the right track and also is doing so pretty quickly. So the last thing I want to look at in terms of the dividend and really in terms of this company overall is the yield on cost. So if you were to buy this company today with a forward dividend yield of 2.83%, if you were to hold it for the next 5 years, your yield on cost would be over 4%. So that's a pretty substantial growth. And that's what can be achievable when these companies have such a high growth rate like we saw, over 18%, right? All right, guys, and that pretty much wraps it up for this talk on the Allstate Corporation, ticker symbol ALL. And now let's switch gears and get into the weekly portfolio update. So we are now here on my dividend portfolio tracking spreadsheet. And as you can see, my portfolio's current market value is $30,782.34, which is quite a bit more than last time we did one of these updates. As you can see, it's about a couple grand more. And really, guys, the only reason for that is because of the 2 additions to my portfolio where I contributed $1,000 to each of them. And that's really why we're seeing such a big boost for this portfolio's market value. With that though, guys, brought a huge increase in annual dividend income, which last time we did an update was just over $1,300, but now is currently sitting at $1,473. So just in a week's time, I gained over basically $170 in annual dividend income, which is so nice. That's over $10 a month in additional dividend income. And then as far as the total gain in this portfolio, guys, I think the $2,000 contribution is messing with this percentage a little bit. So we'll just go by the dollars. Last time we did an update video, the total gain was $1,625, and now it's only $14 less than that. So it's really not much of a difference in unrealized gain at all. Yeah, so really, guys, the biggest update is just what I added to this portfolio. And if you've been following my videos for a while, or if you are in the Dividenders Discord server, which if you're not, I highly recommend you join. There's a link to join it for free in the description of this video. It's basically just a big group of us dividend investors chatting and sharing our portfolios and sharing our ideas on dividend stocks. It's been a lot of fun so far. I think we're up to over 120 members in just like a week and a half. So thank you guys all who have joined. We've had a lot of fun so far. But anyway, guys, if you are at all familiar with my content or are in the server, you'll know that the 2 stocks I bought are JEPI right here, which is the JP Morgan Equity Premium Income ETF, and XYLD, the Global X S&P 500 Covered Call ETF. So both of these really are covered call ETFs. And as I mentioned, guys, I contributed $1,000 to each of these. I was initially planning on contributing $2,000 to each of them, which it was just, I couldn't get myself to pull the trigger on that. So I'm starting small with $1,000 each and may increase my positions as time goes on. The reason I added these to my portfolio, which some of you will already know, is just because I had some cash in my checking account and I figured this would be a better use for that cash in the short or medium term across the next year, next couple years, versus just letting it sit in my bank account and collect dust, you know? So in the meantime, I figured I'd put it in these 2 ETFs and generate some more monthly dividend income, and just how much income we will talk about right now. So scrolling over, guys, with the $2,000 total contribution, $1,000 into JEPI got me basically $75 of annual dividend income, and then $1,000 into XYLD generated basically $92 of annual dividend income. So these 2 combined basically help my annual dividend income jump up over $166. $166.52 to be exact. I don't know if you can see it down in the corner of the screen right here or not, but that is the sum of these 2 numbers, which brings me a whole lot closer to my 1-year goal, guys, which is to hit $2,000 in annual dividend income by September. So we have 11 more months to go to hit it, and we are basically 75% of the way there. We're getting pretty close. But that is really the biggest news surrounding my portfolio in the last week, guys. Otherwise, it's been pretty much business as usual. I put $50 into Intel. I actually put $100 into Intel. I picked up a couple shares this week. And I also contributed $50 into Lockheed Martin, which brings my total number of shares to 1.5 shares. We're getting up there, guys, slowly but surely. And then, believe it or not, I actually put $50 into Altria Group, which is something I have not done for quite some time. But Altria Group is looking pretty discounted right now, so I figured I might as well pick up a share, pick up a couple shares while it's still low. I might even buy it for the next couple weeks too, who knows. I'm basically, at this point, guys, I'm between buying that and Verizon and AbbVie as kind of the third stock that I'm spending that $50 on. And for those of you who don't know, I contribute $150 to this portfolio every week. And for the last probably month and a half now, maybe even longer, with some of that money I've been buying Intel, with some of that money I've been buying Lockheed Martin pretty regularly. Those are my staples every single week. And then with that third $50, I've been, like I said, I've been buying some AbbVie, I've been buying some Verizon, and now I've been buying some Altria Group. So I'm kind of switching it up between those three stocks every week. And so going back to JEPI and XYLD real quick, guys, the addition of these two to my portfolio brings my total number of holdings to 22 different stocks. And like I mentioned earlier, I'm really not sure if I want to add any more. There's a couple other stocks that I'm looking at adding to my portfolio. I think Allstate is looking pretty good. I am highly considering adding that just because I would like to be a little more diversified in the financial sector. And then I'm also considering adding HPQ, but that is another one that I want to do some more research into, but that will be another info tech stock to my portfolio if I decide to add that one. And yeah, guys, that's pretty much all that has been going on in my portfolio in the last week. I gotta say, it's been a pretty eventful week, and I'm really excited to see my annual dividend income jump up so much. And I'm also really excited to start getting some of the monthly income from those two ETFs, JEPI and XYLD. And with that said, guys, let me know what you think of those two ETFs in the comments below. And once again, let me know what you think of Allstate, ticker symbol ALL, in the comments below. I'd love to hear your guys' thoughts on that company. Like I said, I'm still chewing on it. I'm still need to do some more research into that company, but looks like a good one from what I can tell so far. And I would be curious to hear your thoughts because I always get some good insight from you guys in the community. So let me know in the comments below. Also, before you click on to the next video, guys, if you enjoyed watching this video, please don't forget to leave a thumbs up before you go. And if you just can't get enough of dividend stocks, then definitely join that Discord server I was talking about earlier. Like I said, it's free to join, and the link to do so is in the description of this video. All you gotta do is click it and it'll redirect you right there. It's super easy. And now I will be getting out of your hair. But thank you once again so much for watching this video. I really appreciate it. Hope you guys have a great day, and I will see you in the next one.